Well, let's now look ahead to the end of January when the final quarterly underlying inflation figure of 2025 will be posted. Now, in your opinion, if this figure has accelerated to, say, 3.5%, is it likely the RBA will raise interest rates?
Well, it looks that way. We certainly got that signal from the governor at their last meeting in mid-December, just a few weeks ago, because we've now seen inflation numbers start to pick up since July, effectively. The RBA initially thought this might be temporary, and of course, a lot of commentators were pushing that line, but the results that we got in November and December just show that we actually never got on top of this inflation and never got down to the RBA's target, and it now looks like it's picking up again. It reflects a recovery in the private sector economy, which is great news, but of course this big growth in the size of our government is putting pressure on the economy's capacity, upward pressure on inflation, and it looks like the RBA is going to have to raise rates when they next meet in February and probably a few more times this year.
So if that does happen and rates do rise like they're tipped to do next year, do we then point the finger at the Treasurer and the Prime Minister for not having taken a tougher stance on government spending, like you were just talking about, all of the things that have blown out?
Yeah, well, look, I think that's right, and I think the community probably will do so. Many elements of the media will, and many commentators and economists will, because the government has underestimated inflation and its presence and persistence in our economy for 2 years now. They've been patting themselves on the back that inflation's come down from 7% to something closer to 3%, but the target is 2.5%. And of course, that fall in inflation has happened all around the world. Inflation is not under control. The cost of living is still a major problem for all Australians. And the government has never taken it seriously enough. And of course, the RBA, if indeed we need to see a number of rate hikes this year, will probably also have some blame in this because they cut rates, which now looks premature.
Warren, I want to talk to you about the sale of Hamilton Island. I didn't realise it was something that you could buy, but there you go. It went to Blackstone Investment Management Company, which is based in New York, and it was sold for about $1.2 billion and has become one of the largest tourism-related transactions recorded in Australia. In your opinion, does this sale now reflect renewed investor confidence in large-scale tourism?
Look, it may. I mean, it's a very strong positive signal about Australia's prospects. Blackstone is one of the world's biggest and most sophisticated investors. This is a big asset. It's a unique asset, and they've paid a very good price. But I think it mainly is a bet on the continued growth of the Southeast Asian economies and the tourism markets that will eventually start to come out of there. They've started India, Indonesia, but this is the new growth engine of the world. It's no longer North Asia. It's no longer China. It's the Southeast Asian nations, and they're right on our doorstep. So I think that's the big signal here. And also, of course, that Blackstone has plenty of money to deploy into these assets at the moment.
Yeah, interesting though. Another one of our assets has gone to a foreign-owned company. Warren, thank you so much for your time this evening. Really appreciate it.